September 15th, 2008. A day that changed the world. Lehman Brothers, a 158-year-old Wall Street titan, declared bankruptcy. The stock market evaporated. The global economy froze. It was the start of the Great Recession, the biggest economic collapse since the 1930s. We were told it was a black swan, a freak accident, a housing bubble that just burst. That was a lie. This was not an accident. It was a crime. A $13 trillion financial scam designed by the smartest guys in the room to get rich by destroying your life. This is the global financial crisis explained. To understand the crime, you must first understand the weapon. It starts with the American dream, owning a home. For decades, a mortgage was the safest investment in the world. Why? Because people always pay their mortgage. Wall Street loved this. It was boring, but it was predictable. For 50 years, banks would lend you money, and you would pay it back. For 30 years. Simple, safe, stable. And then, in the late 1990s, Wall Street got greedy. They wanted more. A banker at Lehman Brothers had a brilliant idea. Why wait 30 years for the money? Let's take 1,000 of these safe mortgages, bundle them all together into a giant package and sell that package to other investors like pension funds. It was called an MBS, a mortgage-backed security. It was a massive hit. Investors loved them. They got the safety of mortgages without the 30-year wait. The banks, like Lehman and Bear Stearns, made billions in fees for just packaging them. The machine worked, but it needed fuel. It needed more mortgages to put into the packages. By 2003, they ran out of good mortgages, so they started creating bad ones. This is the core of the financial scam. The banks got desperate for any mortgage to feed the machine, so they stopped caring if the borrower could actually pay. They invented the subprime mortgage. They gave loans to anyone, people with no job, no income, no assets. They called them ninja loans. They didn't care if the person defaulted because the bank wasn't keeping the loan. They were selling it in the package to you. But how did they sell garbage and call it safe? They paid the rating agencies, Moody's and Standard and Poor's. These are the referees of finance who are supposed to be independent. The banks paid them millions to stamp their highest rating on these packages of garbage. This was not a mistake. This was fraud. They were selling toxic waste and calling it gold. And then they doubled down. Wall Street invented the CDO, a collateralized debt obligation. If the MBS was a package of garbage loans, the CDO was a package of other packages. They took the worst parts of all, the MBS packages, bundled them together, paid the rating agencies again to stamp AAA on that, and sold that as super safe. It was like taking rotten food from 10 different dumpsters, putting it in a fancy box, and calling it gourmet The entire global financial system was now built on a lie. And one man found the receipt. Dr. Michael Burry, a California hedge fund manager. In 2005, he wasn't listening to the gurus. He was reading the data. He looked inside the MBS packages. He saw the thousands of fraudulent NINJA loans. He realized the AAA rating was a lie. He realized the entire $13 trillion housing market was a house of cards, and it was about to collapse. So he did the unthinkable. He walked into every major bank, Goldman Sachs, Deutsche Bank, and asked to bet against you, the safest market on earth. They laughed at him. They thought he was insane, but they were addicted to the fees. So they took his money. They sold him a credit default swap. They created a new weapon just for him that would pay him billions if the safe packages failed. They didn't realize he had just bought fire insurance on a burning building. By 2007, it happened. The subprime mortgages all started failing at the same time. The MBS packages were worthless. The CDO bombs exploded. Bear Stearns vaporized. Lehman Brothers vaporized. The entire global financial system stopped. The banks that had laughed at Michael Burry now owed him billions, but they were going bankrupt too. The world was ending. And then the real scam happened. The bailout. The banks, the same people who caused the crisis, went to the US government and said, "You have to save us, or the entire world ends. We are too big to fail." And the government did. They gave $700 billion, not to the homeowners, not to the victims, but to the banks that caused the crime. So this is the stinger ending. Michael Burry made $100 million. His investors made $700 million. But they weren't happy. They had proven that the entire system was a lie. Millions of people lost their homes. Millions lost their jobs. And the bankers, the CEOs, who designed the scam, they kept their bonuses. 0 executives went to jail. This economic collapse documentary has one terrifying lesson. The biggest Wall Street fraud in history wasn't punished. It was rewarded.